ONGC climbs nearly 3%. Among the top Nifty gainers now up 4.5% as CLSA upgrades the stock to a high conviction outperform with a target price of 360 rupees. Brokerage expects Eastern Offshore Field to ramp up to peak production, boosting both oil and gas production.
Shares of IGL, BPCL and GAIL climb after BPCL discloses that its board has given the in-principle approval for listing of Maharashtra Natural Gas via an IPO.
Kalyan Jewellers is off highs after a strong business update that has come by. Remember, the jeweler recorded a consolidated revenue growth of 39% for the December quarter, led by strong festive and wedding demand.
Zomato slips close to 3% after Jefferies downgrades the stock to hold from buy and cuts the target price to 275 rupees. The brokerage believes rising competition in the quick commerce industry could be a worry for profitability.
Nuvoco climbs more than 1.5% after receiving approval for its resolution plan for Vadraj Cements. Nuvoco will see a 20% increase in capacity once the resolution is complete.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. As we speak, well, the markets are holding with a gain of close to around 100 points. The Nifty Bank is up close to around 200 points. It's a little jittery looking screen, but at least it's green after the kind of sell-off that we saw yesterday, Mangalam. And I think what's played out in the last few minutes is Reliance Industries that's finding its form. That one doesn't want to break the 1200 odd mark, and it's at around the 1240 odd mark. That's the one that's fighting in for the bulls, because the Nifty Bank, it slipped close to around 100 points from the high point of the day. And that 50,600 mark is a very, very important mark, because that's where the 200 DMA is at.
It will be very interesting to see whether we go back and cross today's morning high as well, because what's interesting is that while we did see a bit of a climb in the morning that was sold into, that's immediately being bought into as well. And if we do cross the morning high, then could there be a case for short covering given the sort of call writing that we've seen or not, is something which will be very important to track in the second half of trade today. But an interesting thing, if my director can pull up both Titan as well as Kalyan Jewellers together, you would see the kind of move that we're seeing. Titan reported its Q3 update yesterday. The company reported 24-25% sort of jewelry revenue growth coming in, and that stock is higher by about 2.5% after being in the green in yesterday's trading session as well. Kalyan Jewellers, on the other hand, at one point was higher by almost 4.5%, reported a 40% revenue growth, but from there the stock has seen a bit of a sell-off and currently is at the low point of trade. What could this mean? It is only the valuation gap between the two. Back in the day when Kalyan Jewellers came out with its IPO, it was priced at around 30% of what Titan's valuation was. The gap was 70%. Thereafter, not only did the companies go ahead and fill the gap by Titan underperforming, Kalyan Jewellers outperforming, now as we speak, Kalyan Jewellers is actually trading at a premium to Titan. So then the street believed that maybe there could be a case for some sort of adjustment between Kalyan Jewellers and Titan, not to take away from the respective strength of these franchises. Both of them reported good numbers, Titan on a much higher base, Kalyan Jewellers on a lower base. Is the valuation at play where the high on Kalyan Jewellers was sold into, whereas the low on Titan was bought into? Let's keep an eye out on these stocks and the broader markets, which are doing a lot better. Bring in Shilpa Raut of Prabhudas Leeladhar for a quick technical check on the market as well. Shilpa, yesterday there was quite a horrific sell-off, but today it seems like we're stabilizing.
Yes, good morning, Nigel and Mangalam, and thank you for having me on the show. Today's, setup was very clear that, we will be having this sideways move, this range-bound market for the day where 20,600 should act as a good support, because we see the highest concentration of put writers out there. And the resistance is already placed at 20,850 zones. So this range is likely to continue for the day until and unless we breach 23,850 decisively to see a move towards 24,000. Otherwise, a range-bound market. For Bank Nifty, also we see that 49,800 is acting as a support on immediate basis, and as long as we are holding that, then again the levels of 51,000 to 51,200 can be attacked.
Okay, all right. What about individual stocks? What do you have on your radar?
I have two buys. The first one would be a buy in ITC. ITC trading at around 445, 446 zones. It has a good support at 440. So that should be a stop loss, and look for targets of 460. The other one would be a buy in PI Industries. PI Industries also holding out well above 3,600. I believe a levels of 3720 to 3750 can happen. Keep a stop loss of 3580.
All right, those are a couple of stocks that you have your views on. Shilpa, thank you so much for joining in. With that, Let's shift focus to a special segment where we get you a few ideas for profit coming in from our colleagues at Money Control Pro. Anant Chaudhary joins in with a stock that he's been tracking. Anant.
So today's stock idea is Sirca Paints Limited, a leading player of premium Italian wood coatings and decorative paints under the brand Sirca and Unico. It is a top 3 premium category wood coatings brand in India and market leader in North India. Sirca has the exclusive license from Sirca Italy for product sales to Nepal, Bangladesh and Sri Lanka. We like Sirca due to its diversified product portfolio across the range, including entry-level, economics and luxury offerings. Our company has recently invested 35 crore in a new facility for decorative paints, where it aims to achieve sales of 60 to 65 crore from wall paints in FY25, compared with 24 crore in FY24. Currently, this plant operates at 30% utilization, and at peak capacity, it can do 250 crore of revenue. To strengthen its pan-India presence, as well as to diversify its revenue base, Sirca is looking to aggressively expand its dealer presence in the rest of the India, excluding North region. The latest acquisition of Welcome brand from New Wembley Products for 20 crore that will improve its presence in paint thinners and reducers. The stock trades at 26 times on FY26 earnings. Key risk for Sirca is the rising competitive intensity following Grasim's entry into the paint industry.
All right, so that's the view coming in on Sirca Paints. We take a short break, come back on the other side. A lot of stocks buzzing around. We'll get you stock-specific action. Remember, there are nearly 1,900 stocks in the green for about 450 stocks in the red. We get you all of that after this short break. Welcome back. Just keep an eye on Reliance, continues to keep moving higher, and the other stock which is actually moving higher is Asian Paints as well. So we'll watch out for that one. And, a bunch of paint stocks in focus ever since Akzo Nobel's update came by. So we'll keep an eye out on that. Another stock on our radar is Zomato, and this on the back of a bearish note coming in from Jefferies. Hormaz joins in with the details. Hormaz, the up move was caused by the opportunity in quick commerce, and now the down move by the competition in quick commerce.
Yes, an opportunity has now turned into a concern for Jefferies, and as a result of which they have downgraded Zomato after the run-up that it has seen in 2024. The downgrade is to a hold rating from an earlier rating of buy. The price target has also been cut to 275 from 335 earlier, which is almost at par with where the stock had closed yesterday, considering the pressure that it saw. And what it says is that this rising competition in quick commerce is now a concern on the profitability for Zomato, and they are expecting 2025 to be a year of consolidation for the stock price, especially how it moved in the year gone by. And they have also cut Blinkit's forecast for its EBITDA sharply for FY26 and 27, and their target multiple has also been halved to 6 times. Now, for Zomato as a whole, Jefferies has cut their EBITDA estimates for FY26 and 27 by 12 and 15%. The profit estimates have been cut by 17 and 18%, and the EPS estimates have been cut by 20 and 21% over this 2-year period. And so as a result of which, you can see the pressure in the stock price today. It was down 3% yesterday, and it's down another 4.5% in today's session as well.
Okay, all right, Hormuz, but we can't let you go just at that. ONGC, the other one that's doing well. You've read up on that as well. Tell us more.
And that has become CLSA's high conviction outperform stock. Has ONGC, and as a result of which you can see the up move in the stock price today. The price target of around 360 rupees, that is implying a potential upside of around 40 to 42% from yesterday's closing levels. Now, what CLSA is saying that the Eastern Offshore, once it ramps up production to peak capacity, that will lift the domestic oil and gas output by 10 and 20% for ONGC by the end of the year. And they are also saying that the removal of the windfall tax will allow ONGC to earn higher realization if the crude oil prices continue to recover, which they are from the recent lows. What CLSA also said is that despite multiple triggers in its favor, ONGC is trading at a significant discount, not only to its own historic valuation, but also to the historical valuations of its peers as well. And despite this, it is also offering a very attractive dividend yield of 6%. So as a result of which, it has become a high conviction outperform stock for CLSA. Has ONGC, the stock among the top gainers on the Nifty today.
All right, we take that point. Just keep an eye on a couple of other stocks as well. Hormaz just spoke about, Zomato. The other one is Swiggy. Every time there is quick commerce competition on Zomato, and as a result of which that stock is lower, Swiggy also sees a bit of a decline. That's largely because they're both in the same industry, valuation discount notwithstanding. If the opportunity is going to be a competition for Zomato, it'll be for Swiggy as well. So, which is why we saw a bit of a spike there, but that has been quickly sold into currently at the low point of trade. But we're talking about some buzzing stocks as well. Biocon is up nearly 5.5% on the back of a bullish note coming in from Jefferies. Vinny joins in with the details on that one. Vinny.
Good morning. Yes, so we are seeing an upgrade that's coming for Biocon from Jefferies from a previous underperform rating to a hold rating. Increase the target price also significantly to rupees 400 per share from previous target price that they had of 280 rupees per share. Now, what is keeping them so positive? Because in the recent times, we've seen Biocon actually come out with a lot of positive news flows in terms of the approvals coming in from a lot of regulatories across the globe, the medical regulatories. So yes, positive news flow on that front. Clearance in terms of the Bangalore biologics plant of theirs from the US FDA. Surely a positive on that one. Approvals coming in from the biosimilar, that is Stellara, across the globe. A lot of countries have given this approval, and just today itself also we've gotten an approval for this drug. The Biocon has gotten an approval for this drug for biosimilar from Japan as well. So that is important to watch out for, and their launches are going to be starting coming in from February 2025. Other than that, growth visibility of biologics business is also improving, so that is a key positive. And key factors to watch out for, obviously, in terms of going forward, is the US FDA clearance coming in with the Malaysia plant. That is a very big and important one for the company. In 2025, we'll watch out for the market share ramp up of other biosimilars of the company as well as the generic semaglutide. How is the performance on that front? And approval for the biosimilar Aspart is a key factor to watch out for. But surely positive news flows around Biocon is keeping the stock abuzz.
All right, we take that point, Vinny. Thanks a lot for that. Let's keep an eye out on Akzo Nobel as well. We spoke about some of the paint companies which are doing extremely well, right? And that Akzo Nobel is gaining about 1.5%. The reason why it's higher is because we know for the last few months that the international promoter had been considering options in India, and that led to a lot of speculation that maybe the business is on sale, and now there is confirmation about that. The international promoter, Akzo Nobel NV, has gone ahead and told the board of Akzo Nobel to do two things. One is to sell powder coatings business and international R&D ops to a separate indirect subsidiary of Akzo Nobel NV itself. What this does is that the two arms of the business, industrial and decorative, get separated. The resultant current listed company, which is Akzo Nobel, would then have only the decoratives business, to which the international promoter has directed the board to look for potential acquisition opportunities that are coming in. In fact, the offers, they're looking to, commence evaluation and examining the acquisition offers as well. In an industry where this is the fourth largest player, who could be the buyers? You would look at some of the top three, etc. as well, right? We've been speaking to a lot of paint companies earlier. Asian Paints has said that they'll be interested in Akzo Nobel if it is on the block. It will be very interesting to see if there are, any competition commission related issues in some of the products that they sell. Birla Opus, the latest entrant and the disruptor out there, has said they are not looking at acquisitions at this point in time. And then we also spoke to number two, which was Berger, which said that they might be interested. There might not be any competition commission related issues, but only at the right price. If there is a price war, etc. for Akzo Nobel, then perhaps they might not be interested. So it will be very, very interesting to see this paint space, how this pans out, because the last 1 year, it's been very colorful. You had a disruptor, you've had competition, you've had low consumption environment, and at the same time, now you have a potential sale of the fourth player as well. So let's see how that goes.
Okay, all right. Mangalam, thanks a lot for updating us on that particular front as well. Well, now let's introduce the Growth Code, a special initiative by Grow and CNBC-TV18, with the aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right event on November 9th to share their valuable insights as well as their strategies. Here's a snippet of what Saket Ramakrishna, the trader and founder of Quick Alpha, had to say on the common trading scams that traders need to be aware of. Let's listen in.
How many of you have come across messages? Okay, you can take my service. I will give you 2 free calls, right? 2 free calls. Only when you make profit, you pay me out of that profit, right? So this is one kind of typical scam where he's simply going to give you buy call or buy put, right? If it works, he's anyways going to get the money because you're going to pay out of the money that you have made through it. If it doesn't work, no need, he hasn't lost anything. He has just convinced you for a couple of minutes, right? So a typical scam, now just assume this is happening on a large scale. Assuming that on a monthly basis, I target 200 people, right? 100 people, I say, I will give you 2 free calls. If you make profit, pay my charges out of the profit. So let's say his charge is 3,000 or 5,000, right? So he gave me a call. I made 5,000 bucks, so the call went double. So he's going to charge me 5,000 from 100 other people. So 5 lakh per month is done, right? So this is one common type of scam.
All right, and we are talking about Titan and Kalyan. Just look at some of the other jewelry players as well. TBZ, for instance, is now higher, TBZ that is, and the other one is PC Jewelers. These smaller players have seen a lot bigger moves over the last 1 year or so. So TBZ is up around 4%. You also pull up something like a Thangamine. I'm just trying to look at that. That one too is up around 4%. So good festive season for all these players. And now if everyone is going to grow, then maybe someone will look at this as well, looking at the valuations of all these guys. Obviously, they will never, trade at similar numbers or similar valuations. These are on a small base. We see big moves.
Well, that's right, Mangalam. Another underperformer has been JTL. In the last 1 year or so, the stock is substantially off. But even in yesterday's trading session as well as today, the volumes are absolutely massive on JTL. And you pull up the stock, currently it's at the high point of the day. Yesterday, I think only 200 stocks were in the green. Yeah. And boy, oh boy, this one was up close to 4.5%. And their past quarterly, actually, operational update that they gave wasn't very, very great. But I don't know whether it's a sign of things that things could improve in Q4. But the Q3 update wasn't that impressive. From there, actually, the stock has gone up. So just keep an eye out on that one. As we speak, massive volumes currently at the high point of the day. We slip into that mandatory break, come back, we'll continue to discuss more stocks with you. Well, let's take a break from the equity markets then. The rupee has staged a recovery today, bouncing back from Monday's lows. Lata is here to help us out with a quick analysis on that front. Lata, over to you.
It's actually a brilliant recovery that we have seen, going by the normal standards of the Indian currency market, where, 5, 10 pies, 10 would be a very big move. 5 is, par for the course. Today, we've actually seen the rupee go all the way to 85.66. And yesterday, around this time, it was at 85.84. It's a near 20 pies recovery that we have seen. Now, the reasons for this is because things got overdone yesterday. The market became so terribly one-sided. And that was because of the changes in the global environment. All of last week, the dollar index was at 109 plus, 109.2, if you please. And then it came down to 108.8 yesterday. But now 108.2 means, a good 1 point fall from last week, Friday levels. Likewise, the yuan had changed color, or the PBOC's approach to the yuan on Friday. They let go that 7.29 mark, which was seen as, something they won't give up. And it gave up 7.30, came to 7.32 on Monday. The big fear was, now, is this a start of a trend? Like, do we see 7.35 very soon? That's not happened. For 48 hours, not even 48 hours, actually for 3 trading days, including today, because trading has almost ended in China. 7.32 has stood, 7.36 on the CNH, which is the Hong Kong yuan currency. The other overestimation came from the feared FPI selling. The way the markets fell yesterday, the expectation was there was another 4,500 crore of FPI selling. It wasn't like that. It was half of what perhaps the market feared. So all told, the market was so one-sided that now there is actually rupee short covering, or rather in the market, what you trade is the dollar. So it was huge long dollar positions which are getting unwound. So looks like today will be a good day for the rupee.
All right. An extreme on either side. Now recovering is what we're seeing on the rupee. 85.7 is what we're looking at. But the government of India has launched the second round of production-linked incentive schemes, this one for the steel sector. And we do have, we spoke with the steel secretary who said that the outlay of 4,400 crore rupees is a carry forward of the savings from the first tranche of 6,400 crores. He added that investments and capacity thresholds have been reduced by 50%. Let's hear him out.
We rolled out the first PLI for specialty steel, and we had substantial savings in the scheme outlay. So within the same scheme, we have invited applications for a second round. We have named it PLI 1.1. The idea is to make the scheme more flexible, more investor friendly, and focus on areas where there is more need of specialty steel.
in order to make sure that there is greater offtake, because that was the concern with the earlier scheme, that the offtake has been slow, has the threshold for investment, for entry, been lowered in the eligibility criteria, and to what extent?
So there are 25 subcategories in the 5 main categories of specialty steels. We have done a few modifications. Number one, we have for augmentation, because many players, they have the basic facilities of steel making. They just augment their capacities in terms of specialty steel. So we have reduced the thresholds, both capacity and investment, by 50%. So we have said that for augmentation, the threshold will be 50% as compared to a greenfield. Secondly, as I said, for CRGO, we have reduced substantially the thresholds. So these are the two things we have done.
All right. Now, speaking to you about the safeguard duty, which has been a long-standing demand of the industry, the matter is with the DGTR right now. What is the expectation? What is the current status of the probe?
So, as far as the safeguard duty is concerned, you know that it is a quasi-judicial kind of a process which the DGTR has to take. They have invited responses and the last date is 22nd of January. So the DGTR will give its recommendation after that, and then the government will take a call on the safeguard duty. But having said that, it is a fact that we need about $120 billion of investments if we want to remain self-reliant in the steel sector.
All right. My final question would be about the disinvestment in NMDC. What is the status of that? We were hearing that the proposal is now in very advanced stages.
NMDC, there is no disinvestment.
Right. In the steel sector.
You are saying in the NSL?
Yes.
Yeah, so there is a decision of NSL, I think in 21 the decision was taken. As far as the steel industry is steel ministry is concerned, there is no fresh development on that side.
All right, with that, we have come to an end on this edition of Chartbusters. The news that all the indices are doing fairly well, holding with gains of almost 1/3% to about 0.5%. The mid-caps doing a lot better after the drubbing that we saw yesterday. So we'll hold on to that, take your leave. On the other side, leave it to the team of Trading Hour.